Hello all, I hope you are well in these extraordinary times. I would like to welcome you to the Fintech Finance Virtual Arena where we're going to be hosting you today. In this special arena, we're going to be discussing how to build a bank from the ground up, the approach to customers, the approach to tech, and everything in between. Joining me today all the way from Singapore, I have the CEO of Tonik, Greg Krasnov. How are you doing today, Greg? How is Singapore?
Thank you very much. Thanks for having me.
I have got to highlight your guitar in the background there. Very cool and strategically placed.
Thank you.
Excellent. And joining us from Finastra, we have Anand Subbaraman. How are you doing today, Anand?
Very well, thank you.
Excellent. And how's Bangalore?
Still under lockdown.
Of course. Well, let's get right into it. So, Greg, first of all, congratulations on last month's fundraising round. Let's take a little step back. Let's just look at the genesis of Tonik. What was the spark? What was the moment that you realized that there was a viable solution to the 70% plus of Filipinos who do not have a bank account?
Look, I'm not a 25-year-old fintecher. I'm a 46-year-old fintecher. I've built from the ground up and sold a consumer bank before in emerging Europe. And I've been involved in starting and growing fintech companies in Southeast Asia for the last close to 5 years now. So this is actually my fifth co-founded startup in fintech space in Southeast Asia. This is the first one though where I've stepped in as a CEO, and the reason I've done that is because I've seen that in the consumer finance space, if you want to play that huge monetizable opportunity for consumer lending around the region properly, then you need to be developing what we, boring bankers call organic liabilities, which is basically retail deposit base, in order to finance that huge scale of the opportunity on the asset side, on the lending side. Because the size of the opportunity is enormous. In Philippines alone, we're talking currently about asset class for consumer loans of about $10 billion. That has potential to grow to $100 billion if you just do some very simple comparables to other emerging markets. So you really can't finance that with wholesale liabilities. You need to build for deposits. You need to solve for deposits. And at the same time, we see that there's massive demand from the consumers in the Philippines who are very young, very digitally native, and they're not being serviced with appropriate savings and term deposit propositions in the digital sphere by the incumbent banks. So that was the genesis, and it started about 2 years ago when we started putting Tonik together.
I always find that that always amazes me in whatever the market may be, whether it be Nubank in Brazil or Kuda in Nigeria, is that there does seem to be a huge oversight on the banks. That there's this big opportunity that seems to be missed. Anand, why do you think this is? Why do you think a lot of the incumbent banks obviously miss out on this, on seeing this huge opportunity?
I think the banks in the Philippines, as in the rest of Southeast Asia and many other early stage markets, they don't focus on the consumer finance space because that space doesn't start bubbling up until the middle class evolves. And middle class starts evolving at about 3,000 to 5,000 GDP per capita. That's when the consumers really start developing that layer that has enough disposable income that then enables them to go and buy some household electronics on credit, or take a vacation on credit, or take out a loan to do a really wonderful wedding for their kids and things like that. So that's why the banks historically don't focus on that here, as well as they didn't, for example, in the emerging Europe. If we talk about Poland, Hungary, or Czech Republic, it didn't start happening until kind of late 90s. And when it comes to Russia and Ukraine and the rest of the former Soviet Union, that only started happening in the mid-noughties. So you kind of see this clear evolution, and the banks haven't caught up to this yet in Southeast Asia, which is a great opportunity for guys like me who have seen it in the other parts of the world and can transplant some of that experience.
Excellent. Anand, did you want to weigh in on that in terms of the opportunity in the market?
Sure. I mean, emerging markets, as Greg alluded to, have a very different profile, right? One is you need to have that break point. The break point is when the middle class gets meaty. But also you need to realize that the banks on the other side have become fat with the government, with government institutions, the public sectors, some of the bigger corporates with them. So the entire banking structure also has been skewed towards servicing the cream, or what they consider the cream. So they've forgotten about the layer below. So you have this interesting thing coming from the other side. From the bank's perspective, is they've forgotten about this new cream coming in, which they can actually tap into, and they don't have the muscle, the DNA to really go after that, which have just become fat on their legacy profit machines. So that's on the piece that has happened in these markets over time. So anybody who comes in the more disrupting proposition, unless the government is doing it, has a huge opportunity. And I think that's really what Greg and Tonik are going to write.
Excellent. I always find it fascinating that in the pre-internet era, say sort of 30 years ago, if I wanted to go and start a bank, one of the biggest barriers for me to actually go and do that is technology. It's quite a significant barrier to entry 30 years ago. And now, of course, you have the opportunity. That barrier is a lot lower. Greg, when was your sort of realization? Was there again a particular moment where you thought, do you know what, this technological barrier for entry has effectively been removed? It's greatly decreased. Was there any particular moment or example you thought, we can do this?
The technological barrier for entry started being removed basically when the SaaS models became available in the core banking space. And that's the big thing that Finastra is going through now. All the banks in the future are going to be based on that. And it's a very different revenue model for the IT vendors, but also cost model for the banks. Much lower upfront cost, as you were saying. But still, we preferred to have the reliability of a supplier who's done a lot in this space, has a lot of lessons learned, has a lot of implementations under their belt, maybe not as a SaaS, but as an on-prem, because we're doing something very pioneering. We're the first bank startup in the Philippines to go for digital, but with its own bank license. So together with the Filipino regulator, we're kind of going in uncharted waters and defining what the digital bank license needs to look like. And that's why we needed very, very reliable partners, not only very cost-effective partners. So very happy to be partnering with Finastra on our core banking because of that.
Excellent. And Anand, and in terms of this journey, where did you, at what point of the journey did Finastra get involved? Where did you think, do you know what, this is fantastic what these guys are doing here. We want to be a part of this journey.
Yeah, that's a great thing, right? So as Greg pointed out, we believe, like Greg does, all of banking is moving as a service, the SaaS model. So at Finastra, we have been evolving ourselves into banking and platform banking over the last 2.5 years. And we start some early shoots with challenger banks in the UK. And then we got talking with Tonik about 9-10 months back in Singapore, saying that, like, guys, we have the solidity, we have done things in Philippines, we also understand how you think differently. We are moving to a SaaS. Let's make this a win-win partnership for all parties concerned, right? And I see our whole approach being in that sweet spot between traditional with experience and being modern, highly modern technology and SaaS, and try and, as I said, we try and get the best of both worlds. And we want to be a solid partner with Tonik and make them successful. Because at the end of the day, banking is only as successful. The technology is only as successful if the bank is successful, right? It's as simple as that. So we got to make Tonik successful into partnership, and that was something that both of us saw eye to eye, and we came together.
Excellent. We spoke not too long ago with our friends in Iceland at Indo Services, which is Iceland's first digital challenger bank, and they went on a bit of a rant about banks in general looking to become technology companies first. And he was saying it's crazy banks are looking to do this because it's almost almost borders on arrogance, thinking, we can build what in 6 months what Google has taken years to do, what Microsoft has taken decades kind of implementing. So they're very much focused on doing that ecosystem play. So I wanted to look at the tech strategic approach for you guys at Tonik. How has working with Finastra enabled you to play in this ecosystem as opposed to being walled in? How have you enabled to be part of a forest, part of an ecosystem, as opposed to a high walled castle?
Yeah, that's a great question. We're able to work as a part of an ecosystem rather than just one solid vertical by partnering with somebody like Finastra through a very, very robust set of APIs that they have developed and that we have integrated into kind of our middle layer, which also enables us now after launch to connect to multiple other third parties very, very rapidly and to offer third-party services on our platform, or in fact provide our resource to their lending books or enable them in some other ways. Look, I'm not a big fan of talking about the whole open banking thing, because to me it's more about, I'm a little bit old school. So the way I look at it is channel partnerships. It's either we're a channel for somebody else or they're a channel for us. But there's always somebody who is making a product and somebody who is helping to bring that product to the market. Having a very robust set of APIs enables you to do that in a very cost-effective way with the types of time responses that the customers in today's world want. In the Philippines, for example, the average consumer loan from a bank still takes 2 weeks for a TTY, time to yes. And then might take another few days for TTM, time to money. In the space of digital lending, you're talking about TTY in seconds. So it's kind of a step function, right? And if I am partnering, as a bank with somebody who is doing digital lending and I would like to provide my book as a resource for their lending, for example, then I need to be able to support those types of rapid bookings and rapid transactions between me and the partner. And having a robust layer of APIs is critical to that. And I think Finastra has done a very, very good job at putting that together. That's a strong part of their proposition. We're looking forward to capitalizing on that.
Excellent. With that thought in mind of, again, APIs, traditionally, banks have spent 80% to 100% of their IT budget maintaining current systems. There's a bank in the UK that is still running and reliant on not a 3.5-inch floppy disk, but one of the 5 and quarter ones. Now, you're obviously a new bank. How are you going to stop yourself becoming one of these incumbent banks in the future? How are you going to avoid the pitfall so that in 10 years' time, you are still taking this approach of APIs first and you're not reliant on technology that is hugely outdated?
Look, it's the lock-in that most incumbent banks face is because the technology they've bought is on-prem. The technology that they bought is extremely rigid, and basically any changes to it, take forever. You can't really modify things because you're in a production environment and running tests on a system that is in live production with millions and millions of customers is extremely risky and it's difficult, etc. So our infrastructure is fully built in the cloud. So we literally don't have anything on-prem except for switches, and everything else, is clouded in. So that enables us to work with suppliers who are also providing a completely different degree of flexibility. Their ability to adapt and to change and to work with us is a function of magnitude different from an incumbent bank. So that gives us confidence that we'll be able to be faster, more flexible, more adaptable, implement things faster as well, and be able to adapt to market reality.
Boom, fantastic. Anand, did you want to weigh in on this in terms of how you can stop some of your customers finding themselves as the incumbent with a lot of legacy?
Yeah, I think the most Two most important pieces is really as a service, right? Software as a service. The more banks move to it, the more current they are with the software, right? I mean, when some of the older core systems came to market, say 20 years back, 25 years back, and a bank took them up, they were not legacy then. The problem in technology is we become legacy on the very next day after we select technology. And the question is, how do you keep that legacy to modernity curve, the gap as small as possible? So a few things that I think what's really happened is, right, why did banks become so legacy so quickly is because one was technology was more inflexible, but they never kept themselves current with the latest version of this. Two things, right? With software as a service, we are leapfrogging that. We are essentially saying your bank is always current. Now, the bank can choose to consume the capabilities at their time because that's a business decision. But you keep them current, the flexibility is there for the bank. That's the most important thing. Two is the tools that we have in play to help things which made banks do customizations 10, 15 years back is much more modern today. So you can do them through configurations. We have all learned a lot. APIs is one, events is another. Very flexible frameworks for communication, for digital UIs and so on, right? Help all of us move that curve. So I just think the next generation of banking, there will be some amount of legacy, but that's going to be a much smaller in number and a much shorter window in which the legacy will exist.
It always blows my mind, clouds as a whole, because there's a lot of very obvious advantages by being in the cloud, but then there's a lot of knock-on effects as well, and a lot of less obvious advantages by having all of your systems in the cloud. And I mean things like hiring people, things like the effect on culture. What have been some of the less obvious effects of using Finastra's SaaS-based model, even on things like the company culture and on a human level?
It's not really so much connected to Finastra itself. It's more the function of the environment we're operating in, which limits the face-to-face ability. So one thing is we've started caring a lot less about where people are based. Our staff is currently spread across 9 geographic locations, 7 countries. We've been having trouble, for example, finding good UXers at a reasonable price point in Southeast Asia. So we onboarded a mini R&D group out of Eastern Europe for UX and UI. And okay, these guys are a few time zones away, and we have to all adapt to each other's schedules, but that's working quite well. My top management, ended up stuck in a couple different places as well. I got one person in Yangon, one person got stuck in Vietnam, a couple of us are stuck in Singapore, a few in Manila, a couple in India. So we're all operating from different locations. The challenge that it creates from a leadership perspective is the team development and the development of the team spirit. So I think that's the main thing. Managing the verticals and the deliverables by verticals is not so much of a problem. I find that none of my top managers are complaining about that. They're all able to set goals and get the delivery of those goals. Where I'm running into trouble, and I know many other CEOs are also running into trouble, especially young growing companies, is managing the interactions between the verticals. It's how do you stop the finger pointing and get everybody pulling in the same direction without being able to, take them to the proverbial forest to get drunk and, for 3 days, integrate with each other on a human level. So that's really the trouble that we're all facing. But it's also a very interesting positive thing, because it makes the human resource, much more globally flexible, much more mobile. I think in the next couple of years, we're going to see completely new models of recruitment, onboarding, and sourcing human talent. I think the COVID is going to totally just push forward the gig economy concept. Everybody's a face on the screen at the end of the day. So it doesn't matter where that face is actually sitting. So interesting challenges. We're learning how to cope with those. as I'm sure is Finastra and everybody else. Let's see how it pans out. But I think overall for the world, it's a very difficult time, but it also a time that will help bring about some new efficiencies.
Absolutely. Every time this is mentioned, I always ask, Jordan, you've got to bring up that COVID cartoon of what's driving your digital transformation. Big COVID wrecking ball coming in. It's definitely pushing. And again, the fact that we're all based on the cloud, fantastic. One thing that I always find, and COVID has really highlighted this, when it comes to being based in the cloud, the ability to scale down various operations rapidly, ATM transactions, etc., but also the ability to scale up things at speed. With the, and I'll do a prediction later, with the kind of potential growth that you have at Tonik, what does that kind of roadmap look like in terms of scale, in terms of onboarding customers? What does it look like in terms of the sheer volume of people that will be using the platform?
There are two things that digital is really good at when it comes to our business. One is scaling, so reaching consumers, and the other one is cost structure. So if you're building purely on a digital basis, you're operating with a step function of cost structure reduction compared to the traditional players. That's why guys like Tinkoff in Russia have their 70% ROE last year, right? Which is like an unheard of ROE in the traditional banking space. But like kudos to Oleg, the entrepreneur that built the bank. He's seen that early on and he's completely capitalizing on it. So I think it's a function of, digital gives you on one hand scale, on the other hand, the cost. When it comes specifically to scaling, Philippines is a fantastic example for us because it's, population is very young, 24 years old on average. Philippines is the number one market in the world in terms of daily Facebook use, 4 hours per day on average. It's just some incredible numbers. Whenever I post something on Facebook, the first 10 likes I get from my Filipino friends. It seems like they never disconnect. So I think for us, that presents a great opportunity because you can scale into the customer base quickly by talking to them in their language and being where they are, which is online. They're all online. So it's an opportunity we see. The speed of scaling, specifically for Tonik, will be determined by how quickly we can bring to profitability our core consumer lending proposition. So I'm a little old school. I spent first 10 years of my career in private equity thinking about EBITDA and leverage buyouts. So when I look at the neobanks that only have the liability side of the balance sheet and are scaling up like this, and then are posting, hey, I got all these users, please value me based on user numbers. Valuations based on user numbers on liability side of the balance sheet, where the more users you have, the more money you lose, just like make no sense to me. So, we're not rushing into scaling. What we're going to really focus on is establishing our lending proposition, getting the costs and especially the cost of risk under control, which takes time. You need to train the risk models. And that's when you can really step up the scaling. So our business model is not, predicated on payments as for a lot of the neobanks. Very much an asset liability play, like Nubank in Brazil or Tinkoff in Russia.
Absolutely, but both of those banks have obviously scaled quite rapidly as a whole. With that in mind, Anand, in terms of if, let's say, for argument's sake, you become very profitable quickly and you have to onboard 50 million people in a week, would you be ready for that at Finastra?
Absolutely. Our whole cloud proposition is all about that, right? It's about scaling up, scaling down, scale in, scale out, right? And we have a strong partnership with Microsoft. We are leveraging their Azure technology, which is pretty much neck to neck with AWS in the cloud wars. So we have a very sophisticated cloud platform on that we're in. And then we have our Fusion Fabric.Cloud, which is our platform for all the fintechs to come in. So one of the cloud effects we get is the whole network effect, that fintechs connect through our platform visionfab.cloud, and that can connect to multiple banks. So we have multiple levers here, right, which we want to use, right? One is a scalable core banking system, a very scalable visionfab.cloud with the fintech ecosystem around it, and the power of the Azure compute platform housed in Singapore for Tonik, right? Using the Azure data centers out of Singapore to give them very low latency to the markets that they want, right? And I think those three, we are in it to win it together with Tonik.
Absolutely. The last thing, I always love asking this to new banks. So Atom Bank has will.i.am as its creative on its board as its creative reference. Klarna has Snoop Dogg. If Tonik was to be personified by kind of a pop culture icon, and we have had some great ones, who would it be, to put you very much on the spot there?
It's funny you asked that. Just a little while ago, we made a decision that like Google has Googlers, etc. So what are we going to call ourselves? Yeah, and we decided that we're going to call ourselves Tonizens. That's Tonizen is one of the members of the Tonik family. And actually then, one of our guys Googled and discovered that there's a Macedonian rapper called Tony Zen. Actually, apparently when you Google Tony Zen, that's the first thing that comes up. Hopefully in the future it will be Tonik Bank. So, me and a few top team members, we've listened to his tunes. It's kind of very mellow East European, reggae and rap, and it's very interesting musically. So we'll see. Maybe he becomes the face of Tonik because he's Tony Zen. That's my answer. I'm not very big on otherwise using celebrities to promote something. I think the product needs to speak for itself, and a celebrity endorsement, it's a cop out. It's what you do when the product doesn't speak for itself. So,
pretty excellent. I like that. Well, thank you so much for the time here. Where can we find out more about yourself? What's the best way to reach out to Anand?
Fusionfabric.cloud. That's our heart and soul of Finastra, and Finastra.com. Right? That's really what I say. We reach out to us.
Excellent. And Greg, yourself?
www.tonikbank.com. That's our website. Has LinkedIn links to all of our management team. So please visit.
Brilliant, excellent. Thank you very much, guys.